Reliance Capital, that as well, has been reacting to its earnings this morning. And let's just see what Rel Cap is up to. Well, the market has recovered. We're back at that 6,000 tick. It's a good 1.5% lower for Reliance Capital as we speak. In fact, it would be interesting to hear out what the management have to say after the quarterly performance, wherein the consolidated net profit has come in lower at 181 crore rupees versus a comparable of 401. Sam Ghosh, CEO at Reliance Capital, as well joins in. Sam, hi, morning. Walk us through the earnings for the quarter. What led to the 201% rise in the net profits?
Yeah, so we achieved a profit in Q2 of about 181 crores. If you take out for the last financial year, the capital gains that took place in the asset management stake sale to Nippon Life, then on a like-to-like basis, we've grown at about 200% on last financial year. Now, if you look at the reason for the profit growth are mainly from the core businesses. Each of them have been able to outperform last year's figures. And so we start with the life insurance business, which has substantially outperformed. And they achieved a profit of about 136 crores, nearly 300% growth compared to last financial year, same quarter. And this business has been consistently being obviously overachieving in terms of profits, and this quarter has been exceptionally good. And we expect that this trend will continue. If you look at our general insurance business, last year we showed a loss of 105 crores, mainly due to the higher provisioning for the motor third-party pool. This year we've shown a profit of 16 crores, so again a very good turnaround. And then if you look at our commercial finance business, profit of 91 crores, nearly 27% growth in terms of profits. And our our asset management business also has shown a profit of 67 crores, nearly 16% growth in profits. So all our businesses in this quarter have shown increased profits compared to last year, same period. And that has obviously contributed to the overall profit of Reliance Capital.
Morning, Sam. Nikunj also joining in. How has been the performance of your insurance subsidiary, and what is the outlook on growth on that subsidiary going forward?
If you look at the life insurance business, we are mainly an agency-driven company, and our focus in February, March this year was to increase the number of agents we have. So we increased the number of agents by about 30,000. Those agents have become productive, or a large number of them have become productive, and the average ticket size per policy is obviously increased substantially. Today we have average ticket size of nearly 19,500 rupees per policy compared to about 12,000 in the past. So that has helped to increase our total new business premium. Then going forward in the next couple of quarters, we believe that this quarter will also be fairly good for Reliance Reliance Life, and they will show substantial growth compared to industry. However, in Q4, the new product guidelines will come into force from 1st of January. We may see that there may be a slower growth rate compared to last year, but that will also happen for the industry.
So in terms of the AMC, how are your AUMs grown this quarter, and what sort of growth prospects are you looking like, or rather foreseeing for the year?
See, if you look at our AMC business, as of 30th September, we achieved a profit of 93,000 crores. That has now crossed over 1 lakh crores as of today, end of period AUM. So I think there's been growth, and growth is expected to continue. The good thing about our asset management business has been that 18 months ago we started focusing on retail debt portfolio. That time we started off, we had a retail debt portfolio of about 4,000 or 5,000 crores. Today that portfolio is about 40,000 crores. 40,000 to 45,000 crores, somewhere in that range, and we expect that to continue growing, and that has helped us increase our profits. So though on the equity side there has been slight reduction in terms of the equity AUMs, and because customers have moved out, however on the retail debt side we've had significant number of customers coming in because they feel safer in that portfolio. So I think that has helped us quite a bit, and that refocus will help us continue to improve our AUMs in the next few quarters.
Margins on RCF have improved substantially this quarter. What has led to this, and what is your guidance going forward?
See, we have been able to increase our NIMs primarily because we decided to change a portfolio mix as well as to relook at the portfolio and go more granular. So if you look at our portfolio today, though it's 16,100 crores AUM, however, what we have done is we've gone into smaller towns. So earlier we were in only 18 cities. Today we're in nearly 36 cities. And the average ticket size per loan has come down significantly, both on the mortgage side, loan against property, as well as SME. And there we've been able to increase our yields. And that has helped us to increase our net interest margins to 5.3%. And that has obviously helped us increase our profits. Now, going forward, if you look at it, we should be able to maintain this sort of NIMs, if not increase it slightly, because now the effect of our increased penetration into the smaller towns has obviously improved, and we have a team well established there, and business is becoming more and more. It's coming in more and more from the smaller towns as opposed to the bigger cities. So that is obviously helping us increase our yields.
So what are the growth plans for the rest of the fiscal? Do you foresee any pressure on any particular parts?
No, if you look at in terms of Reliance Capital, our focus will continue to be on these 4 core businesses of ours, as well as trying to ensure that our Reliance Securities and Reliance Money comes back to profitability. Reliance Securities obviously at break-even. Reliance Money showed a small negative figure, so we want them to come back to profit. Whilst the 4 bigger businesses, we want them to continue to improve productivity, as well as keep our costs under control to improve our profitability. Because ultimately, in these stress circumstance scenario, industry scenario, or market scenario, we obviously have to ensure that each of our businesses continue to deliver in terms of profitability.